Stop. Look around your room right now. That phone in your hands, it's owned by a giant company, be it Samsung or Apple. The shoe on your feet, that's another giant company. That coffee you're drinking right now, that's another company. Every single day, you're giving your hard-earned money to all these giants. You're making them rich. What if you would flip that around? What if every time someone else buys something, maybe be it a phone or coffee, you just get a piece of that money? By the end of this video, I'm untangling the mess for good. You're going to understand what is a stock and how to read the market like a pro using those indexes, and why trying to pick one company is always a trap. If you want to move from being a spender to being an owner, stick with me because I'm going to show you how you can own something. So give these videos a thumbs up. My name is Eunice, and in this channel we talk matters personal finances. Here is whereby we discuss about how we can save our money, how we can invest our money, and how we can build wealth together. So stick around, and I am always dropping a video every single week, so you can just keep watching and looking out for that. Before we talk about the stock market, we have to kill the fear of the word stock. People hear that word and they run away from all this discussion about stock market, and they think they are losing everything. So a stock is just a fancy word of ownership. Back in the day, it was a physical piece of paper whereby it signified that you owned something. In today's world, that is more digital, but the meaning is one and the same thing. It is just a certificate that says, I own a tiny piece of this business. Picture this. Assume you have your favorite local bakery just near your home, and they want to expand, but they need some cash. So they split that bakery into like 1,000 small tiny pieces, and they want to sell them. When you buy a stock, you aren't betting. You're literally like owning just a small thing from that company. If that bakery makes like some profit, a tiny bit belongs to you. If they grow, that slice becomes even more valuable. So basically, a stock is just owning something. I love to give this story when I'm talking about stock market because it's very easy to follow and somehow you tend to understand. So let's make it real. Assume you have 3 people who go to McDonald's. Person A, person B, person C. The first person A, is the consumer. So what they do, they go through the drive-thru, they spend their $12 on the meal, so they eat, they leave, and their money is gone forever. Then there's person B. Person B is always the employee. So what they do, they go inside the Mac, they keep flipping those burgers, they work hard for their paycheck, but by the end of the shift, they don't go home with a grill. They just trade their time for money. Then there's person C, and this is where exactly I want you to be. Person C might be at home or at the gym, or maybe they're sleeping. They don't flip those burgers. Sometimes they don't even buy those Mac. But because they own a stock with the McDonald's, they own a piece of that money-making machine. Every time that consumer or person A buys a Mac, a tiny fraction goes to person C's pocket. So it goes to the investor's pocket. Which are you today? I want you to shift from being person A to being person C. Most of the people stay as being consumers, and I want you to be an owner of something. But how can you be an owner of thousands of companies without losing your mind? You do this by having indexes. So an index is always a cheat code. This is where thousands of companies are, and because you can never watch like all these indices or indexes, you can't watch all of them. That is like trying to watch 4,000 football games all at the same time. So we use indexes such that it can help you like invest your market. An index is like simply like having a thermometer. If you want to know if someone is healthy, you don't even check like every cell in their body, you just check a temperature. That's the same way an index is used to monitor the market, like the stock market. An index is like basically a shopping basket. It's a group of where big and strong companies are put together and they're put in one basket. So when you're investing, you're just investing in this one basket. So when you hear the news are saying like the market is up with 100 points or down with 100 points, they are talking about the scores of that basket. It's always like a shortcut to understand how the economy is doing. Either it's winning or it's losing. In United States, we have 3 big baskets. Basket number 1, the S&P 500, and this covers 500 biggest company in the United States. Basket number 2 is the NASDAQ. This is a tech club. It covers all AI and all chips. Basket number 3 is the Dow Jones, and this covers like 30 massive steady companies like Coca-Cola. Let me show you how the world is connected to each other, because this isn't like an American game only. The whole world just does the stock market, and every powerhouse country does this. So it's always a scoreboard for just knowing how the economy is performing. So in Japan, they have something we call Nikkei 225. If the world is buying Toyota and those PlayStation, and you see the basket is green, it's doing well. In UK, they have something we call FTSE 100, and that is a British giant. In South Korea, they have something we call KOPSI. That is the king of hardware. That's the home of Samsung. In Germany, we have something we call the DAX. That's the heart of European engineering. And I'm sure you're gonna ask me, why does all this matter? It matters as close to you, even to your living room, because we are all connected and the global economy works as one machine. If the basket in Japan is shaking, we will feel it. Tracking all these tells us like the entire world is breathing or it's even choking. It helps us see like big pictures before we even move our money or where we're gonna invest our money. Because when we choose those outside investments, we're gonna think about the stock market. So it is all connected. Right now, there's a war in Iran. And when you check your investment, when you check those stock markets, right now you'll see all those red and you'll see it's dipping down. Not to mean that it might stay like that, and that's why we just need to understand the global market, but sometimes it will just rebalance itself and it will come up. But then that's why you need to know about the global economy. As much as you don't follow news, it's just a good to know thing. Here is why I love the basket more than the individual stock, and I don't invest in individual stock. Most people try to find the next big thing, but that is very, very dangerous. Remember companies like Blockbuster? It was the king of movies. Everyone thought that they were invisible, but then they became bankrupt and they are not even heard today. Remember companies like Nokia? They were the king of phones, but they vanished. If anyone owned like Nokia as a company, then they lost everything. But if someone owned an index that time, they were safe. So what I'm advising you is choose an index. The index doesn't stay loyal to the losers at all. When Blockbuster failed, the index kicked it out and replaced that with Netflix. When Nokia fell, the index already had like Apple in their basket, so it just picked that. The index is always like a garden. You see how you remove the weeds? That's the way it does. It keeps the winners and just throws out the losers. I promise to untangle this mess for you, and I'm gonna do it right away. So many people don't tell you this, even when you're investing, be it you're a new investor or you're still investing. Many people don't talk about these checkpoints, but I want to tell you just for them to remain at the back of your mind, even if you're already investing your money. Checkpoint number 1 is the red days. You see how you have a thermometer and it takes your temperature, and sometimes you find you have a fever? That's the same way the market can also get a fever, and that means the market is gonna go down, and it might stay down for quite some time, maybe for a year. That is called the bear market. It's very normal to have those episodes, and you have to be very patient and still. Checkpoint number 2 is the big giant rule. Not every company in that basket is the same size. In the SP 500, there are always like big companies like Microsoft. They carry the weight. If the giants are winning, the whole basket looks good. Checkpoint number 3, the fee trap. When you buy this basket, maybe index funds or ETF, always look at the expense ratio. If they are charging you 1%, they are stealing from your future. So you should look for those that are low costs like VOO or VTI, because literally you're buying the whole market, and that keeps money in your pocket. Now you know owning a stock is literally owning something. The indexes are always like scoreboards, right? I know this video was not a long video, but at least you've understood having a stock is owning something, and you now know an index is a scoreboard. The next step is finding the money to start being an owner of something. So I created some budget templates and some debt templates, and they're in my bio. These are just roadmaps to just find your extra $50 or $100 every month for you to start buying those baskets. Go to the link in my bio, grab those tools, and stop being a consumer and start owning something. And if you hate spreadsheets and all these things about budgeting, I created for you a video and you can just become a conscious spender. So I'll link that video right here. The world is working very hard every single day, so it's time for you to just own a piece of that thing. In this channel, we're building wealth together, and I would love to build wealth with you. So join my channel, and I am here showing up every single week for you guys. So go be an owner. Bye bye.